Hello guys, welcome back to a new episode. RALLYTOP Investing 3.2 SMC Masterclass here. In our last episode, we did discuss about a very important topic titled Candlestick Mathematics, and I received tons of requests from traders out there asking me to do a video to show them how they can actually make use of the daily candlestick bias to be able to take trades on the lower time frame. Now, this video is to show such traders on how to do it. And you need to pay very close attention because this can actually mar or make you in the market. So you need to pay attention. Now, if you haven't watched the previous upload, I'm talking about the candlestick mathematics, please go back and watch it before you come to this one. I'm going to leave the link in the description box, okay? So you can understand better by the time you are watching this upload. Now, let me just briefly recapitulate. I said in the last upload that for you to determine the bias of the market, you need two candlesticks of the same color. So meaning that if you find two consecutive bullish candles, which means that the second day's candle, for example, let me just show you on the chart. Day one is this one. This is day two. These are the only two candles you need. You cannot make a decision based on only one candle. You need these 2 days candle, okay? Day number 1 and day number 2. Now, you need to see day number 2 close above day number 1. Once you find that, just like so, once you find that, then you will have a good idea that the third day is likely also to be a bullish day. That was what we established in our last episode. Now, how do you capitalize on that information to take trades on the lower time frame? Like I said in that last upload, I said, for example, this is a bullish candle. It opens below here and closes here. And I said, when price opens the next day, it will most likely range around here before dropping to form the low of the day, such as this. And after forming the low of the day, then price will start moving back higher to expand higher to form the high of the day. So after forming the high of the day, it comes back to close somewhere here. That's a summary of what we discussed. Now, problem is this. How do you really take advantage of this move down into the body of this day 2 candle to take trade when it's expanding higher to be able to be in the market? That is what we are going to discuss in today's video. So you need to really pay attention. Now, how you do that is this. Once you find day number 1 candle, day 2 candle close above, take your flip tool and mark the entire range of day 2 candle like this. Now, if you configure your flip tool, it will show you the 50% mid level, 38.2% level, and 61.8% level. These are the 3 levels I have configured my own flip tool just for the purpose of entering with this strategy. Okay, so once you have done that, now you will need to pay attention on your lower time frame as price is coming back down, as price is moving down before this expansion. What you want to watch out for is number 1, if it taps on, if it gets to the 38.2% flip level, or the 50% flip level, or the 61.8 flip level. My sweet spot is the 61.8 flip level and the 50% flip level. These are my sweet spots. You are not just going to jump into the market when price moves to any of the levels I've just mentioned now. You're not just going to just pull the trigger and enter the market. No, that's the wrong way to trade. You want to filter out bad trades from good trades. How do you filter out? Now, there are additional confluences you need to have before you can take your trade on the lower time frame. What are these confluences? Number 1 is this. Once price comes back to either 38.2% or 50% or 61.8%, you want to see a key level on your chart aligning with that FIP level. That's the first filter. Okay, what do I mean? Let me quickly show you now. If you find right price going higher like this, okay, and price comes back into maybe 38.2% FIP level, for example. Now, once price gets there, what you want to look at is that actually this is 38.2% FIP level. Okay, no problems about that. But is there any key level here on the chart that aligns with that FIP level, such as this? For example, if you know how the retail mindset works, then you will know that retail traders who trade support and resistance will look at this as resistance. So they will say resistance turn support, and they want to take their trade from here. Now, listen to me carefully. At this point, you have 38.2% FIP level and a key level on your chart that is aligning. These are two confluences now. That's not enough, guys. You still need one more confluence, and that is at this point, that 38.2% that coincided or overlaps with a key level, you need to see a candle rejection. What do I mean by a candle rejection? Let me just show that to you quickly. What I mean by a candle rejection is this. Now, you know that price is coming down, and then you have something like this. That's what I mean by rejection. As you can see, price came down here, and then all of a sudden it retraced on this candle until it closed above this key level. Can you see that? That's a rejection that I'm talking about. So with all these three confluences, you now have a high probability trade scenario in your hands. Now, this is not the only rejection candle. You also have another type of rejection candle. Let me just show that to you because it can happen in the market. Now, you can have something like this. Now, in this case, this candle closed below. After closing below, the next candle opened, and that next candle is a bullish candle. Sometimes you find it that way. Let me just make it a bullish candle so you can understand. So, like so, a bullish candle, this is also a rejection. I want you to understand these are the two types of rejection that you need to see at this level. Once you find any of these two types of rejection, then you can pull the trigger. So, this is the way you want to trade on your lower time frame. Now, let me show you another type of scenario that could possibly play out in the market, because the market is dynamic, and as a trader, you need to understand this very concept. Okay? Now, I'm going to take you to the next slide and show you another scenario entirely. Look at this. It's very different from this one that you saw here. This one, I said price closes here, and when it's opening next time, it will range around here and then drop to form the low of the day before moving higher. That's in the case of this one. That's what will happen. Form the high of the day and then closed here. Now, in this case, price opens here, and then instead of going down, first of all, to form the low of the day, it went up first of all to form this high. After forming the high, price now retraces back down to form this low and closed here eventually. You can see that this is different from this first one here. Can you see that? It's very different. Now, how do you approach this kind of scenario if you find it in the market? Well, I'm going to show you all of that. But remember that I told you that once price does something like takes out the high of the previous day's candle with a candle wick, I told you in our last upload that that is called liquidity sweep. So the way you trade this sweep here is different from the way you trade this one here. So I want to give you the two sides of the coin so you can be able to understand how to approach the market if you find any of these two scenarios playing out on your chart. So I'm going to show you how to approach this one when we get to the live chart so you can understand better. So we can now go to the live chart and let me show you some of these examples. Okay, here is the first example. Take a look at this. This is day number 1, bearish candle. Day number 2, bearish candle. And the candle of day number 2 closed below the low of the candle of day number 1. That's what you want to find first of all. Secondly, when you have identified that clearly, so you are expecting the following day to be a bearish day. Now, how do you approach this? If you take the following day as your bearish day and you find opportunity to enter the market, where is going to be your target? Your target is going to be here. The target is going to be here. Simple. Okay? So, but the first thing you need to do is this day 2 candle. You need to use your fib tool and understand the zones that I have told you about. So from the, this is a bearish candle. So it starts from the high. From the high, use your fib tool to see till the low here. And there you have your levels marked out on the daily time frame, that is. Now after then you go to the 15M to look for opportunity to enter the market. Now on the 15M we are going to use the same exact steps that I told you about. So as you can see, this is your 38.2% fib level. This is the 50% fib level and the 61.8 fib level. Now remember, this is our target. If for any reason price comes down, first of all, to take out this low, that means that on the daily time frame there is a sweep here before it goes higher. If that happens, I'm going to show you how to approach the market as well. Now, let's continue to play price. Before we play price, please remember, look at this 38.2% fib level. Is there any key level on your chart here that can align with this 38.2% fib level? Please check. There is none. There is no key level that aligns. And therefore, we are not expecting to take trade from here. Even if candle comes here and gives us a rejection, we're not going to take the trade from here because there is no key level here to support or to align with this fib level. So the next one is the 50% fib level. Is there any key level here? No. There is no key level that aligns with this 50% fib level. Now, look at this 61.8 fib level. Is there any key level that aligns? Yes, of course. There is a key level that aligns, and I want you to look at it carefully. Look at this. This is a valid pullback. The high of this candle is higher than the high of this bullish candle. The high of the bearish candle here is higher than the high of this bullish candle. So that's a valid pullback. Let me show that to you. So what you essentially have here is this. So you have a low here, and then you have a high before price dropped. That's what you have. Look at this. That's what you have there. So there is a valid pullback here. So if you look at that valid pullback, that is a key level that you need to look at. All right. For example, if you mark it out, this zone. So as you can see, it clearly aligns with this 61.8%. Or if you want to do it this way, if you are those retail traders that trade support and resistance, what do you call this? This is resistance. So it's a key level. Apart from that, look at what is happening here. If you look at this, what do you call this? Look at this candle. Okay, that is a breaker block. Everything aligning to this 61.8%. So you want to take your trade from here if it gives you a candle rejection. We are not looking to take trade from 38.2%, neither do we want to take trade from 50%. It is this 61.8% that I will wait to take my trade from. So let's continue to play price and see what is going to happen. Now, look at what is happening here. Price has taken out this our low before going higher. Remember the scenario I told you about, where price will first of all come to take out a low or a high before going down or up. Remember that? So if you get to the daily time frame, you'll find out that this is a candle sweep. Let's continue and see what happens. Now let me take you to the daily time frame and even show you that one. Can you see this is a candle sweep? This is a sweep. This next day's candle first of all swept the low of the previous day instead of going higher first before coming down. This is the second scenario I told you about. So let's get back to the 15M. So this is the 15M. But how do you trade this now? How do you capitalize on this? Or are you going to wait for until price gets all the way to this zone before you take your trade? No, I don't think that is the right way to trade. Now, there are two ways you can trade this market. There are two ways. One, look at the smart money dropped price to close below this low, inducing traders to believing that price is going to go lower, that price will continue to go lower, whereas they know that they are not going lower. They want to go up to this very point here. But there are times too, price will not make a deeper retracement and will just drop and start going down. But in this case, look at this candle pattern here. Let me take price from here now. This is one way you can trade. After the drop price, look at the aggressive candle that came down to convince retail traders that this downtrend was going to continue. But immediately after this aggressive bearish candle, the bulls took over and printed this candle. This should tell you something, that the bulls have already taken over from the bears, and that this move here was just pump in price to induce traders to go short. So what do? You take your trade from here, from this candle, the close of this candle, wait for this candle to close, and then you take your trade from there, and your stop loss just below, give a buffer to your stop loss, and you want to wait and see what is going to happen. So let's continue to play price. So as you can see, price came into that zone and started moving higher. So that's one way for you to take your trade. Your TP will be that 61.8, because that's where we are looking for this trade to go to. Your stop loss just below here. Okay, that's all right. So you have your trade there. Now that's the first way. The second way is this: you need to wait for price to take out this high here. Very important. If price takes out that high and closes above, you want to wait for price to come back down and tap into any fair value gap. Please follow me carefully. So let's continue to advance price. Let's look at what's going on here. Look at that. What happened there? This candle swept this high. After sweeping that high, we need something to happen. Let's play one more time. Can you see that this candle closed below? I've talked about this three candle formation several times. Candle number 1, candle number 2, candle number 3. Now, once it closes below, you know price is trying to come down to retrace before continuing with this uptrend. So how do you enter the trade? This is the second way of taking this candle sweep. So what you do is look for fair value gap. And where is your fair value gap here? From here, you have a fair value gap up to this point. But there is another one here. So you just put your stop loss here. That's all. That's going to be your trade. Why do I do it like that? This is the first fair value gap. You have this second fair value gap. So put the stop loss just below that second fair value gap. That's how to trade. And now let's continue to advance price and see. So price tapped into this fair value gap precisely and started going higher. So we could have taken another trade here to go long, just like so. And our TP will also be that 61.8. Let's look at it. So our TP will also be this 61.8. And of course our stop loss just below here. Give a buffer to your stop loss, and that's it. That's our trade. Simple. Now all of it is pointing to this 61.8. Once price gets to this 61.8, we want to take price lower. So let's continue to advance price. Boom. We have gone too far. Let me take price out from here. Okay, so 61.8. That was where we were looking at. And look at this 61.8. What do you find here? Candle wick. Took out that resistance with a candle wick. Immediately you find this candle wick. What do? Take your trade. How do you take it? This is going to be where you take your trade from. This bullish candle closed there. Your stop loss just above. That's all. That's your trade. Let's continue. That's your trade going down. And where are you going to target? This low. Simple. Let's continue. So can you see that? So price is going lower. We take this trade, and our stop loss just above this zone, okay? And then our TP, where is going to be our TP? This low, okay? That's our TP. It's as simple as that, guy. You don't need to make trading difficult. That's our trade. Remember, this has smashed our TP here. Now we want to enter going short. That's the beauty of this strategy. So we continue. Boom. Simple. Now, if you are enjoying what I'm showing to you right now, can you please hit the subscribe button if you have not yet subscribed to become part of the family, and turn on the notification so that anytime we publish a new video like this, you'll be notified about it. And if you haven't joined our free Telegram channel, please do so just immediately, because right there we are going to start having live stream. I'm just having some difficulties in streaming live for now, and I'm appealing to our numerous fans to please bear with me. We are going to start very, very soon, and you are going to be informed through our Telegram channel. So become part of that Telegram channel. And if you want to join our VIP community to learn more, the doors are open. Okay, I'm going to also leave the links in the description for you to find. All right, so let's get back to the daily time frame and look for another opportunity. Another example here. Now, why am I showing you different examples? Is because the market, like I said, is dynamic, and you need to understand it like the back of your palm. You need to approach the market dynamically. That's why I'm showing you all this. Now, take a look at this. You remember in our last episode, I talked about when price sweeps the previous day's high or low, that is liquidity. This is what we are going to look at, how to trade it here. Look at this. It swept the high of this previous candle. Now, immediately you find candle going up to sweep and closing back into this range, this previous day's candles range, just switch over to your lower time frame and look for opportunity to go short from there. And if you go short from there, where is going to be your target? Your target is going to be this low here. Simple. This is going to be your target. So we go to the 15M and see whether we have any opportunity as it's sweeping the high. So let's look at where it swept the high. Okay, so if you switch over to your lower time frame immediately as it swept the high and went back into the range, and came back into the range, this is what you would have gotten, guys. Now, first of all, it took out that high. This is the high we marked on the daily time frame. It took out the high with a candle close. Because it took it out with a candle close, you will now need to wait for chalk, and your chalk would have been here. But it didn't take out that chalk, as you can see. It didn't take it out. So because it didn't take it out, that nullifies this setup here. Before price went higher to take out this high. Now take a look. When it took out this high the second time, how did it take it out? You need to understand that very well. Look at the way it took it out. With a candle wick. And yet again, let me zoom in for you to see properly. And again, look at this high. Look at this candle. It took out the previous candle's high. Again, with a candle wick. You remember our video on two-step candle sweep? If you haven't watched that video, I'm going to leave the link in the description. This is very important. This is powerful, guys. When you find two-step candle sweep like this, it becomes very powerful in the market. Now, if you want to take this trade directly so that you can catch the move down, all you need to do, this is your area of interest. Simple. It gives you tight stop loss and a good risk to reward. When you begin to understand how to trade this type of two-step candle sweep, you'll become a better trader. Now, as price comes back up, it taps into it, you want to go short from there. And if you went short from here, you would have made a massive profit. Okay? You would have made massive profit. So your stop loss just above, like this, give a buffer, and then your TP just down, first TP here, second TP here, and then you trail your stops just like so. Okay? Very, very good trade for you to master how to take it. Very good setup. Very, very good setup if you can master how to take it. And if we go back to that daily time frame, like I said, that this is going to be our target. This is our target. Okay, so let's continue to advance price. Now, take a look at it. It has already gone to your TP here on the lower time frame if you left it to run all these days. Because if you left it to run, it would have run for about 3 days to hit your final target. And that's massive. That's massive. But again, look at this. Something has happened here. There is a candle sweep here of this low. It swept this candle. Can we go back to the lower time frame and see whether we could have taken any advantage of this zone? Let's get back to the 15M. This zone here. This is where it swept, right? So let's see the advantage we would have had here. So it swept liquidity here. Look at this 3 candle formation again, guys. Candle number 1, candle number 2, candle number 3. Look at these candles, guys. This middle candle prints the lowest low and took out the previous candle's low with a wick. and this closed above it, this is a powerful zone to have taken your trade from. This one, it's a powerful zone, guys, that you would have taken your trade from. But if you are not comfortable with taking your trade from there, then you can wait for price to take out this high. But sometimes it may not come back to take out this high, but it has to close above it. And as you can see, it didn't close above. So where did it close above? Right here. It closed above here. Okay? So when it closed above, then you could wait for price to come back to this zone. But sometimes it will not come back. And that's why we take my trade directly from here to go long. And so let's continue to advance price. So you can see price is moving. It's moving higher, guys. Can you see? So it didn't come back. Whereas if you took your trade here, you would have made massive profit. How would you have done that? Look, when you mark this candle, this next candle came to tap into it. So you would have taken your trade here to go long. If you wait for the daily candle to close, you may not get what you want. So this will be your TP. Just give a buffer to your TP, and that's your trade. First of all, you target this very high. Target the high. Okay? After targeting the high, the next one is this one. Okay? So that's how you trail your stops. And if you did that, price would have gone in your direction, as you can see. And you continue to trail your stops like that. It's as simple as that, guys. And the next high would have been this one. Your next high would have been this. And price still got there. That's massive. So this is the way to take trades in the market. The market is dynamic. It does not have one size fits all. You need to learn the different entry methods. Okay? Entry styles. You need to learn it. Alright, guys. I hope you got something out of this video. But if there is anything that you want to clarify, please drop it in the comment section, and I will attend to your question. I can assure you that I will attend to your question. But for now, I see you in our next upload. Thanks for watching.